IndiGo is the only Indian airline that is running profitably in a challenging aviation environment, posting profits for 7 straight quarters. It kick-started this financial year with a profit of 2,728 crores. That is 44% more than the profit it made in the last quarter, which is the fourth quarter FY24. However, the profit is 12% less than 3,000 crores it posted in the first quarter of last year. Now, revenue from operations has grown by 17% at 19,570 crores as compared to 16,683 crores year on year. The airline's numbers were better than last year despite the load factor of 86.7%, lower than the 88.6% load factor last year. It carried 27.8 million passengers between April to June, which is an increase of 6.2% when compared to the same period last year. The airline said it added 15 passenger aircraft between the April to June period. IndiGo also operated over 2,000 daily flights during the quarter across 88 domestic destinations and 30 international destinations. IndiGo also said it had a total cash balance of 36,100 crores, including 22,000 crores of free cash. Now, my colleague Sonia Shenoy spoke to IndiGo CEO Pieter Elbers on how the airline is continuing to maintain this leadership position. Here's a slice of that conversation.
Which is underpinned by a healthy demand. And I think India, in general, India is one of the fastest growing markets in the world. It's one of the markets which has recovered very fast post-COVID. And we see that reflection there. And of course, we see month over month variations of traffic and even quarter over quarter. And we know that the first quarter had its own dynamics with the elections and all going on, having some effect on the overall outlook. But we remain robust and solid. We had an 11% growth in that very first quarter, and we predict a high single-digit number for the second quarter in terms of capacity being offered in the market. And we maintained our annual capacity guidance as well. Again, all bases our confidence in the market growth.
There is a little bit of pressure that you're seeing as far as the margins are concerned. The core EBITDA margins for the company have fallen to 26.4% versus 29.8% same time last year. Now, I understand, Peter, that, in the last couple of quarters, commodity prices, especially crude prices, have gone up. So just want to understand from you, on the operational performance, do you think it could get worse before it gets better, purely because of the way we've seen commodity prices rise?
Yeah, well, thanks for addressing that, Sonia. If we compare year over year, your observation is absolutely correct, and that's the way how we've also published in our earnings, in our press release. But we should keep in mind that the last year first quarter had its very own very specific dynamics with some sort of trends in terms of capacity and demand, resulting into a steep increase in yields last year. If we compare that this year, basically we see a rather stable environment in terms of yields or revenue per seat. Against that backdrop, I think we're indeed very pleased because we had to absorb a increase in fuel price, some global pressure on inflation and all. If we look to what's happening in some other markets and some of the other airlines globally who are posting their results, we see that actually globally airlines are being confronted with that, and Indian Airlines are no exception to that. And against that backdrop, as I just shared in a call, it's actually a very strong and very solid performance going forward.
Well, thanks so much for tuning in to CNBC-TV18. Make sure you follow us and stay updated on all our social media platforms.